Did you know that Cathie Wood recently unmasked the Tesla stock sell-off? Cathie Wood is a known Tesla bull, so make sure to stay tuned and keep watching to find out what Cathie has to say about the sell-off. Most investors and investing enthusiasts greatly rely on analysts' words regarding stock prices and the stock market in general. This is because said analysts always refer to data they have thoroughly observed before making comments on different respective stocks. Cathie Wood, a known investor, is one whose words are given weight by people in the same field as hers. In today's video, you will see what Cathie Wood has to say about the Tesla sell-off. Tesla is an American automotive and clean energy company that designs, develops, manufactures, leases, and sells electric vehicles and energy generation and storage systems in the United States and other parts of the world. With futuristic and eco-friendly goals, Tesla became a name known all over the globe. What is a sell-off? By definition, a sell-off means a sale of assets, typically at a low price, carried out to dispose of them rather than as normal trade, or simply a sale of shares, bonds, or commodities, especially one that causes a fall in price. A sell-off occurs when a large volume of securities is sold in a short period of time, causing the price of a security to fall in rapid succession. As more shares are offered than buyers are willing to accept, the price decline may accelerate as market psychology turns pessimistic. Cathie Wood is described as an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics. Cathie Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly discerning claims. She is known to provide monthly updates about several things like monetary and economic policies, innovations, what can be expected in her field of expertise, and comments on the Fed's decisions. According to Wood, they are trying to figure out why Elon Musk recently said that he has a super bad feeling about the economy. In fact, in a leaked email to his employees, Musk said that he has a super bad feeling about the economy and asked Tesla employees to step up their efforts after supply chain issues resulted in a very tough quarter for the company. Cathie Wood explained that they are trying to figure out what he is looking at to say such a thing. She said that they know for a fact that Musk's sales in May were up globally by 60%, while almost every other auto manufacturer's sales were down a lot. That said, Wood assumes that it is not Musk's sales that propelled him to say that, since his sales are looking good, except for the margin, perhaps. It can be that he may be reflecting on the decline in auto sales. Jamie Dimon, Chief Executive Officer of JP Morgan Chase, talked about a hurricane and advised people to prepare for it. He is not sure as to what kind of hurricane it will be and whether it will be a mild one or not. Also, some say that he has changed his tune in the past month since his company JP Morgan reported earnings. According to Dimon, he sees a lot of business activity and that he must see it slowing down. Goldman Sachs President John Waldron described such an environment as confluence of shocks that have been unprecedented in his career. According to Wood, Waldron has a very good global perspective in every sector, so Wood believes that at the margin, these three business leaders are seeing the economy in some sort of stress. Wood, the famous technology investor, predicts a major upside for this electric vehicle powerhouse. When it comes to new technologies with explosive growth potential, nothing has garnered quite as much enthusiasm as electric vehicles. Not only are they an essential part of a clean energy future, but Tesla is proving it can produce such cars at higher profit margins compared to manufacturers of combustion engine vehicles. Cathie Wood, ARK Investment Management CEO, who directs a series of innovation-focused exchange-traded funds, or ETFs, is one of the biggest Tesla bulls on Wall Street. Tesla stock is the largest holding in the ARK Autonomous Technology and Robotics ETF, the second largest holding in the ARK Innovation ETF, and the fourth largest holding in the ARK Next Generation Internet ETF. When combined, the funds own over 1.3 million shares of Tesla, worth $911 million at the current price. That holding has declined from a high of around 5.6 million shares amid the broader tech sell-off. which prompted Wood to cash in some earlier gains. But thanks to Tesla's upcoming stock split, ARK is about to own millions of additional shares. Don't forget to hit the like and subscribe button to be updated for more Tesla stock content. Going back to the video, Tesla is the top seller of electric vehicles worldwide with over 1 million deliveries in the last 12 months, and it has drawn praise from the CEO of key competitor Volkswagen Group for its highly productive manufacturing processes, which are levels above the rest of the industry. Tesla has produced an automotive gross profit margin that is the envy of other car makers. Its most recent margin in the first quarter of 2022 was more than double that of rival American car manufacturer Ford Motor Company, for example. As Tesla continues to scale up production with new gigafactories coming online in Texas and Germany, said figures are bound to get even better. Everything else being equal, a high gross profit margin results in more money flowing through to the bottom line in the form of earnings per share. Earnings are simply the company's net income divided by the number of shares outstanding, and in Q1 2022, the figure jumped 633% year over year at Tesla. Despite the recent tech sell-off, which has pushed Tesla stock down almost 47% from its all-time high, Wood is as bullish as ever over the long term. It is no secret that Tesla is facing some near-term challenges relating to supply chain issues and tougher economic conditions, which could dampen the demand for expensive purchases like cars. But in April, ARK updated its Tesla modeling and revealed a price target of $4,600 per share by 2026, or $1,533.33 per share after the stock split, a 560% upside from where Tesla stock trades today. ARK also has an extreme bull case scenario where Tesla stock could jump 732% to $5,800, $1,933.33 post-split. This assumes the company sells 17 million cars in 2026 and that Tesla's future self-driving robotaxis make up a significant chunk of revenue. These are slated for production beginning in 2024. But even ARK's bearish case of $2,900 per share, $966.66 post-split, is strong, as it still points to 316% growth from the current price. While some of those figures are unimaginable to the common public, it's worth noting that Tesla has delivered a return of over 18,000% since it was listed on the public markets in 2010. Simply said, a $10,000 investment back then would be north of $1.8 million today. Mark Delaney, a Goldman Sachs analyst, emphasized the importance of Tesla's leading position in the creation and manufacture of electric vehicles. He added to say that the global electric vehicle adoption trends could act as a tailwind for the company's sales. The reason behind these bullish assessments is that the adoption rates may not pan out exactly as he wrote. Moreover, he said that a slowdown has the potential to curtail Tesla's lead and that of its competitors. It is no secret that numerous automakers, including famous and well-established ones, are scrambling to catch up with Tesla's technology and infrastructure. Therefore, Tesla has to move fast to hold the lead position and maintain a safe distance from companies venturing into the EV sector. Still, a lot of people, investors and analysts alike, are confident that Tesla will remain ahead of the game. With a lot of people having this much faith, Tesla should do its best to maintain that spot. Tesla is doing its best to maintain the top spot in EV production, and it is quite obvious that they are putting in much effort. During the pandemic, when all other companies and manufacturers have been struggling with chip shortages and supply chain bottlenecks, Tesla pivoted between suppliers by rewriting its software just so the factories and plants won't stop running. In fact, Tesla has opened 2 new manufacturing facilities in Austin and Berlin. These new plants aim to increase production along with the Shanghai and Fremont factories. These developments can most possibly mean an increase in operating margins and scale to manufacture vehicles. The opening of Berlin and Austin allow them to achieve higher gross margins. Even Credit Suisse analyst Dave Levy reiterated his bullish stance on Tesla stock. He said the share's recent fall is an attractive entry point. With the globe's current economy, it will be quite challenging to accurately predict how everything will perform. So you should observe how the stock market is performing before making a big move. Visit our channel and watch our other videos if you enjoyed this one.